Hi, everyone. I am the Climate and Disaster Resilience Manager at SoCal Grantmakers, which is one of three philanthropy serving organizations in California. Ourselves, NorCal Grantmakers, and Catalyst of San Diego and Imperial counties make up the Philanthropy California Alliance. These trainings are made possible at no cost to you through Philanthropy California's partnership with the California Governor's Office of Emergency Services, or Cal OES. And the main purpose of these trainings is to build capacity for organizations just like yours, serving frontline communities and working to advance climate and disaster resilience. We have the great fortune of working with our implementing partners at Gary Bess Associates, Vexing Media, and our interpretation and translation team to bring these trainings to you. So here we are. Welcome to our final webinar. Believe it or not, we've done 5 of these since January. So congratulations to those of you who have been following along this journey with us. And thank you so much for the implementing team following through on all of the moving parts and pieces to make these possible. So this far throughout the year, we've covered a lot of ground. In past trainings, we've talked about data and logic models. We've talked about program plans and funder searches, organizational capability, needs assessments, analyzing funding opportunities, and the foundations of grant writing. So that's quite a lot. Congratulations to you for making it this far. Today, we've got an excellent module for you on budgeting, and the last half of this webinar is going to feature a panel discussion that uplifts different approaches to building partnerships to pursue funding opportunities. Our panelists are really eager to share their knowledge with you, so please stay tuned to the very end to hear what they have to say. And while this is our last virtual training, we are taking the show on the road, so to speak, and our band is going on tour in a way. Through the end of this year, we're going to be delivering in-person regional trainings across the state. Next, we're going to Imperial County on May 30th. Then in June, we'll be doing a training in the Inland Empire and Riverside. Then we're heading to Sacramento, Redding, Sonoma, and Fresno. So please feel free to spread the word about what we're doing. Tell your colleagues, your friends, your collaborators, especially if you feel they can benefit from this curriculum. And of course, if you'd like to join us again, we would love to meet you in person. All the details are on our Climate Capacity website. Also, the recordings for all of our virtual trainings will be accessible online in English and Spanish, so you can refer back to any material for review or anything you may have missed, or if you'd like to share them with a friend or colleague. You can also always make a one-on-one appointment with the GBA team for direct assistance, assessing a grant opportunity, or workshopping a current grant application that you are working on. And we also have a search tool you can use to look for open grant opportunities that may be a good fit for your organization. Everything is on the website. I will be sharing the link again and again throughout the webinar, so you won't miss it. And finally, I can say on behalf of our team, this whole series has exceeded all of our expectations. We've really, really enjoyed getting to know you and building this virtual community as we've moved through this series. Please make sure to use the resources on our website. Both they and we are 100% here to support you. With that, I'd like to see if we can warm up the chat box just a little bit more before we hand it over to our first speaker. Usually I would do a longer activity, but I want to save as much time as we can for our panelists. And so if you haven't introduced yourself already, I do see a lot of activity. Please feel free to drop your name, your organization, your role, and maybe an emoji that expresses how you're feeling going into today's training. Thank you so much. I hope you keep using this chat box to connect with us as well as each other. And I hope you enjoy today's session. Sarah, back to you.
Great. Thank you, Lily. Let me share today's slides. This is Sarah speaking again. And I'm introducing our grant writing curriculum. The topics we'll be learning about today. As Lily said, today's webinar is 5th in a series of 5, our last one in the series. We've moved through the topics listed on this slide, which are the parts of a grant proposal that you would prepare as you're responding to a notice of funding opportunity or a request for proposals. Our goal in teaching this is to give you tools to build your organizational capacity to win grant funding, to build projects that address community needs, and to learn about participating in cooperative projects that address climate and disaster-related needs. That's the climate capacity building that we're talking about in our project. Today, we'll cover budgeting, a required part of almost all proposals that can feel very different from the narrative because of the financial skills involved, but it's actually very, very closely related to it. And as we've done before, we needed to add in an extra topic, partnerships and collaboration. It isn't always a section required in a grant proposal, although it certainly is required for some types of grant projects. But partnerships and collaboration are almost always a topic in the background, where the partnerships that your organization has or hasn't built in the community can play a critical role in your ability to succeed at or even to participate in some kinds of projects. The need for a collaborative approach is especially critical for climate-related projects. And that will be the topic of the panel in the second half of today's webinar. So this is where we're at in the parts of a proposal. Our first topic today is budgeting and pulling your application together. Our presenter is Angela Robinson, and you can see the many finance and accounting credentials after her name. She's worked for many years in finance and leadership, often as a chief financial officer in for-profit and nonprofit organizations. In her consulting firm, ARR Consulting Services, her main goal is coaching and mentoring for accountants from diverse backgrounds and persons of color. Angela, welcome. We're really pleased to have you sharing your teaching and your expertise with us today. I'll turn it over to you now.
Thank you, Sarah. Good morning, everyone. I enjoyed seeing the different emojis in the chat. I see there's a lot of excitement about budgeting. Next slide, please. So in this presentation, we're going to cover 3 key agenda items. We're going to look at the development of a program budget, budget content, monitoring, and sustainability. A large aspect of the presentation will look at the content section of the budget. And as it was mentioned, there is a sample budget and associated narrative that's available as a downloadable file. Please, when you get a chance, please download that. However, in this presentation, we will look at a quick snapshot of both what a budget would look like and also the associated narrative. Next slide, please. So a program budget is a framework through which organizations allocate different resources to different departments or teams for a program. What is a budget? I know you all heard this word. Budgeting is another way of describing and understanding a plan. Just as grant writing requires project conceptualization before you begin to write, budgeting is part of that same developmental process. It is a reflection of monetary resources required to implement the program. It is a restatement of the proposal in financial terms. Again, it is a plan, a projection, and it does not have to be exact. So if you think of replacing the word budget with narrative, it becomes less intimidating. If you understand grant writing, you'll be able to understand program budgets. Everyone in this room has the tools to work across both spaces, and this presentation will help you. Next slide, please. So there are different skill sets. There is program-based versus finance. Programmatic skill sets usually require project oversight, management, communication, relationship building, problem solving, and adaptability. Whereas finance, we're usually accountants, finance focus, compliance, risk, reporting, very detailed, and communication. It's two different ways of thinking and working, but they must come together in order to create a budget. Next slide, please. Why program staff should be comfortable with being able to understand the funding of programs or projects. It helps to think of the budgeting process like creating a personal household budget. It has the same content. You have your revenue and expenses, but at a much smaller scale. Next slide, please. Before we get into more content details, these points remind us about budget content. It describes and gives the detailed cost of every activity or program to be carried out with a given budget. It should be based on the RFP, the agreement, and whatever the plan is determined in the written narrative. And usually you're not only writing a budget in numbers, you're also writing it in narrative format. Next slide, please. These are the key areas, two major areas that are in your budget. Your revenue, which income or funds received to support the program, and expenses, the cost incurred related to the activities of the program. And we're going to look at that direct versus indirect a little bit later and look at more on expenses as we go through this. So for example, if we think of an educational program would have different sources of revenue than a health and wellness center. In our next slides, we will break down and look at the expenses in more details. Next slide, please. So these are the common expense categories that you usually see in budgets. And this is fairly common. Depends on the program activities that are identified in the grant narratives. If we continue with our example of an educational institution or program, they might have a higher cost in personnel, training, supplies, contractual, whereas a health and wellness might have higher costs in personnel, training, and supplies. It all depends, but just know that these are key categories. The main category that you usually see in a budget that is usually the largest is the personnel cost. Then another high one can be contractual and subcontractor. And as I mentioned, we will talk about indirect costs a little bit later. Next slide, please. So personnel is a key cost, so understanding the key terminology used in grants for describing what staff time, a full-time equivalent, FTE. You will see that word in most grant applications. An FTE is a unit of measure to represent the workload of a full-time employee. Translated into hours per time, It is a measurement used for the budget, and I put the calculation there where it usually is 52 weeks times 40 hours. Different organizations define FTE differently. Some organizations might have a full-time week equates to 35 hours of work, which in a grant FTE language, this would be a 0.875 FTE, not a 1 FTE. The key is to be consistent with defining FTE for your organization and applying that correctly in your applications. Next grant, please. Continuing on with this, a bit more on FTE, since again, this is a key area. In budgeting employee time, a person can never exceed 1 FTE. But you're budgeting time on the proposed project, not the overall hours, which means that you're looking at the amount of time and effort the person will expand on the project. This might be different from the amount of time or FTE that they have for the organization. And I just provided some different examples of, of FTEs, a 1 is 40 hours a week, a 0.5, 20 hours, a 0.2 at 8 hours a week. Next slide, please. In planning your budget, you must take in consideration the project plan. What is feasible for a 0.2 FTE? This addresses the level of effort, taking how much time the person is going to really spend on the project. Who else will be directly associated with the program, understanding what other roles will be on that program, and including protected time. Protected time could be such as administrative time that a person needs to apply to the project, making sure that it's not just time that they're doing activities or serving somebody, but also some protected time is factored in. And the last is more looking at it from a bigger picture standpoint, feeling empowered to have conversations about project staffing and time allocations with leadership. Know that in most nonprofits, someone should have an understanding of the overall allocations of all the staff on all of the different grants, funding streams, etc. And that would be the key person that you'd have a conversation with when you're setting up your grant application. Next slide, please. So another aspect that is associated with the salaries is the fringe or fringe rate. These are expenditures made by the employer for legally required and voluntary wage reductions. And I'm not going to read through the list, but they're all on the slide. You are required to either calculate the detail of what is included in fringe or provide a fringe rate. Usually in the completion of your total budget, you can derive a fringe rate. And for example, a fringe rate is determined by taking the total amount of fringe, which could be all of those items that are listed, the total amount divided by the total amount of salaries. Take the salaries and the fringe over the salaries, excuse me, and that would become the fringe rate that could be used on the grant. Organizations typically have a total percentage they apply in addition to the salary for this factor. Some funders ask for a breakdown of the rate, which would be listing all of the different like taxes, health insurance, et cetera, et cetera. And some just ask for your total fringe rate, which again is that calculation of taking the fringe cost divided by the salaries. Next slide, please. Travel. Having clear travel policies is important to ensure consistent application for all staff and everyone understands what is allowable, reasonable for the organization. Then you won't have any surprises. Ensure that travel cost always ties back to the objectives or the grant narratives. In the reference for the U.S. General Services Administration gives guidelines for per diem and other travel guidelines that might be of help to you. Next slide, please. Contractual expenditures are associated with contracts or agreements with external entities or individuals to deliver specific goods or services required for the program. Can include professional, consultants, or subcontracts. And subcontracts can add a level of oversight to the program. This is a key area where you're setting up collaborations or partnerships with other nonprofits where one or the other person can be a subcontractor on their grant. So it's marrying different organizations through a grant together to provide services or other activities or programs. Sometimes you may need to ask for some guidance if you ever have a federal grant, because there's a bit more of compliance requirements when you have a federal grant and you have subcontractors. Sometimes you might see that the grant budget is only asking for consultants. Usually you can mix your consultants and professional services, and usually you will have to detail out who you will be paying for those services and or who you will be paying for those consulting fees. Next slide, please. So equipment versus supplies. So generally, equipment is larger purchases and supplies are smaller. Right now, with the federal government, equipment is greater than 5,000 and supplies is less than 5,000. Note that this is changing as of October 1st of this year. Ensure the request again ties back to your objectives of your program. Check your RFP carefully for any restrictions, because not all grants pay for all types of things. And again, I always say this as my accounting site, follow your organization's policies. You want to be consistent with how you fill out this grant application with how you are having other policies in your organization. Next slide, please. Just kind of more getting into a little bit of the understanding of the different types of expenses. We have a direct and indirect type of expense. I know you've heard that word indirect, and it can be used in different contexts. So direct is what we've been talking about, direct expenses that we can identify that relate to the project, program, service, etc., that we're putting on the application, as opposed to indirect expenses. Indirect, our main difference is that indirect expenses lie in the traceability of the expense to a specific cost objective. You are not able to directly attribute the indirect expense to a project, program, or service. Most grants have where you're allowed to have an indirect rate on those grants. Those expenses are usually necessary for the benefit of the whole organization, and gave some examples. Utilities, depreciation, administrative salaries are usually considered indirect. Next slide, please. Continuing on, talking about indirect, on your grant request, it may only be a percentage of the total grant request, or it may be a percent of the total personnel on the grant. Pay attention to that because different applications require different calculations for the indirect amount. In federal grants, you often need to, but you don't necessarily have to have an approved indirect cost rate agreement. It is for your benefit. And the reference that is on the slide is where you can learn more about rate agreements and the process for applying for an indirect cost rate. Next slide, please. So we're looking at just a snapshot of the budget. This is only showing the personnel category of the budget. Notice that it's providing us an understanding of the FTE, full-time equivalency of the employees on this particular project, what the grant support is going to be, what other peripheral support is going to be, and then the total project budget. The associated fringe benefits are down below, and this is at listing out those different fringe and just a flat rate, and again broken out by the grant support, other support, and then the total project. The full version of this budget is available as a download file. And when you do get a chance to download the file, there's just a few things that I'd like you to look at. For one, the total revenue for this project is $50,000, but the total project cost is $133,777. You'll notice that the expenses match the revenue and are detailed by category, and there's 3 categories. And the fringe is a fixed percentage with the details addressed in the budget narrative. In our next slide, please. We're looking at a snapshot of the budget narrative that corresponds with the budget that we just looked at. This slide is only showing the personnel category, and then we're going to look at another slide that's going to show direct costs in a minute. But notice that it has the allocation amount for the grant. And this is a sample of based on this RFP. Pay attention to your RFP. It might have the layout of what your narrative should look like. If not, a layout similar to this might work, but just making sure that you have the detail that ties exactly back to your budget. And again, a full version of the narrative in English and Spanish is available in as a download. Another name for a budget narrative is budget justification. It's always the detailed explanation and supporting documentation that provide the rationale for the various expenses outlined in a budget proposal. It shows your calculations, and it provides a clear and well-justified budget, enhancing the likelihood of securing the necessary funding for your project. Next slide, please. This is a continuation of the same narrative, looking at the other direct cost. And as I stated in my first slide, that development of the budget, we discussed how budgeting is another way of describing and understanding a program. The budget narrative is the place that is really descriptive of your monetary resources and how you're going to use them. This is usually the area when I've worked with grant writers and fund managers that they love, because it's writing out all the detail and how they're going to spend their money. So always align your budget narrative with your details of your budget. Next slide, please. So we're getting to the end, which is after you have submitted the budget, you've been awarded the money, then there's a process of monitoring and maintaining sustainability. And it's just a quick look at monitoring the budget requires data reports from the finance team. So programs usually have the deliverables that they're monitoring, but those deliverables also have the associated budgets that are based on those deliverables. They're not always, they don't always line up where, you have deliverables and then the money matches. Sometimes with different grants, you may have some startup costs that will need to be incurred before you even have deliverables. So understanding the deliverables and how it is affecting the bigger picture will help you as you're monitoring the numbers. Learning how, or asking for assistance in learning how to read and understand and interpret an actual versus budget report. The first time you're really looking at one, it can be overwhelming. You're going to see a word that's usually a variance. That's not a bad word. because variances can have different meanings depending, back to my example on the startup. You might have a lot of startup costs, but you might not have activity, so your variance from actual to what's budgeted might be a little different. Not necessarily bad, might be a timing issue. So understanding that what's happening, can be okay, but at least having an understanding. And variances can be construed as another form of accountability. Next slide, please. So as I was talking about the skill sets for program and finance people, two different skill sets, but in order to be successful in this endeavor, must come together, collaborate, connect, and be in sync with the requirements of the program grant. The most effective way I have ever seen that is a lot of effective communication. Those have been the most successful grant projects that I've been involved in. Next slide, please. So in closing, I want to remind you that the completion of a budget is not always linear. First step is to try. Next is submitting a budget requiring changes will allow you to grow from the experience. And then after preparing a couple of budgets, it will become so much easier. I know program people will usually enjoy preparing the narratives, and that's usually fun for finance people too. But lastly, don't stop, don't stop, keep trying, and your organization will benefit in the long run. In closing, I'd like to say thank you for your attention. Now I'd like to turn it back over to Sarah, who will lead us in questions.
Great. Thank you, Angela.
You're welcome.
This is Sarah speaking again, and this is our time for questions and answers for Angela on budgeting and finance. If you have a question, you can raise your hand. We'll spotlight you for the group, and I'll invite you to unmute and share your questions or comments. We'll also be looking into the chat box, so feel free to type questions there too. We've got one already coming in the chat box. The question is from David. He asks, can you please explain how variance in a budget is a form of accountability?
Of course, thank you, David, for that question. Well, your variance is derived from your actual versus your budgeted expenditures. So, I'm sorry. So it's helping you understand where you're at with that budget versus actual. So it's holding you accountable to being able to understand the degree of where the program is versus where you spent in your money. Questions?
I have a question coming from me and my experience. I come from the world of federal contracting, which is slightly different from grant-funded programs. I learned quickly there that there was no incentive to be saving money and have your expenses turn out different from what you had budgeted. Can you speak to what that's like in grant projects?
For federal or for regular? Non-federal? Yeah.
Either way, whatever you think would be most illustrative.
I would definitely not anticipate having reserves because that doesn't look like you have or aligning with your plan. You are basing your budget on your plan. So yes, things happen that your plan might not be able to be achieved at the same level. But having a conversation with the funder if you need to go back and there's a major change in what's happening with your initial plan versus how you need to spend your money. So I would advise not to try and have any savings on any grant budgets.
Thank you. Another question in the chat box from Ashley Miller. Can you please elaborate on how to calculate FTE if an organization defines full-time as something other than 40 hours? If 100% of someone's time is on a project, but that means 35 hours at their organization, are they 1.0 FTE or 0.875 FTE?
It depends on the guidance in the grant agreement. Some grant agreements will specify FTE equals one full-time equivalency, which one full-time equivalency is the 2,080 hours. So for that person who, let's say they were, you know, 0.875 FTE, that would be what would be listed on the grant as opposed to one FTE. Because it's following with your policy and how you show your FTE in your organization, and aligning with how they require you to show FTE. If they're thinking that the person is one full-time equivalency, then they're going to think that person is, 2,080 hours when they're not for your organization.
Another question from the chat box from Sylvia Quezada Yoshimizu Yi. She asks, are there standard ratios / relationships between totals to keep in mind that make for a more competitive budget?
I'm not understanding the question. Ratios related to what aspect?
Sylvia, would you be willing to unmute and say a little more about your question? Please go ahead. Uh-oh, we can't hear you, Sylvia.
Is that better? Sorry, I didn't have my
Yes.
mic in front of me.
Thank you.
I was curious about how totals relate to each other. If reviewers of the grant would see perhaps, too high of a number for personnel costs relative to the overall request, things like that.
Again, it would depend on the grant agreement. I've seen agreements where personnel was like 75, 80% of the total cost. So it's whatever is being asked of you as deliverables, if it's more human labor as opposed to X, Y, and Z. So it really depends. Yeah, I haven't seen a hard, fast, can't be 100%, it can't be X, Y%. It all depends.
We've got a raised hand by Carmen Brammer. Carmen, would you like to unmute and talk with us?
Yes, thank you, Angela. This was a fantastic presentation. Thank you so much, because budgeting is always the challenge. So my thing, it's a comment and just maybe get your thoughts. Our community foundation has changed the way we submit budgets. Instead of project budgets now, they just want your overall budget, and then from that, they'll determine. So as you're seeing that, I see you shaking your head. So can you explain that to me? Because then there's some fear that you may over or under budget because you want to get the grant and that kind of stuff. So we'd love to get your thoughts on that.
That's usually required with some of the federal grants that I have to work on. We have to do the whole organization, and we have to balance it too, which where does that ever happen, really? So I see that as the trend. With the narrative that's written up, it gives the guidance as to what the amount of the project is going to be for the budget. So from my understanding, they're just trying to see how much is that project as a proportion of your organization. That's kind of how I derive what I'm seeing from this. And yeah, most of the federal grants that I do is based on the full organization, and I have to balance it.
Okay, gotcha. Okay, so that's helpful though. Then I can make sure the narrative is reflective. Thank you so much.
Mhm.
question from the chat box from Carolina Castro Almeida. When developing a budget for a grant that will only cover part of the project, should we always provide the full cost of the program and then have another line detailing the percentage that the grant itself will cover?
Yes, yes. Usually being transparent that this is what, this grantor is covering, but this is the total amount of our program, yes.
Another question from Melanie Harris. What's written is personnel versus supplies. Melanie, is that in reference to the comparing categories that we were talking about earlier? Or is there anything else you want to say about the question there?
Of things like personnel costs to supply costs or travel, or if there was a general breakdown. Thank you.
For example, like an expense breakdown.
No,
I-
more like the like if you're looking at a federal like budget and they have the different sections. So for personnel, for supplies and expense, and then other, I guess your other expenses. If there was like a rule of thumb, like what we used to do was a like 60% to 40%. So 60% of personnel to 40% of supplies. But
Gotcha.
that was in a very different industry. So curious about this world.
I haven't seen that recently. Most budgets that I work on, we tie them to exactly what we're trying to achieve and what our deliverables are. And whether that's 70% personnel and 10% consultants or blah, blah, blah. Yeah, I have never really seen where it had to be a certain percentage, to be honest with you.
Thank you.
Another question, this will be our final question out of the chat box. From Sid Nunari. How do we determine or differentiate between direct or indirect expenses? To me, salaries are direct expense, no?
Salaries for people directly associated with the project or grant are direct expenses. Salaries for your CEO, for
Great, thank you. I'll encourage everyone to look into the chat box. We've got some additional discussions about how grant reviewers look at budget ratios from Kirin Kumar, who's one of our panelists. For now, though, we're going to move into our short break. It will last for 5 minutes, and during that time, please take a look at the poll questions that we're going to share with you, whether before you leave or after you come back from your break. There are 2 questions, so make sure to scroll down in the box to see them both. We'll review the group's answers when we come back, but your answers are never visible as belonging to you. They'll only be combined with the whole group. So enjoy your short break, and I'll call you back when it's over. You'll hear me start speaking again. The main reason we have a midpoint break like this is to give our interpreter, Felipe Ortiz, a little rest. Thank you, Felipe, for all that you're doing to make our webinar and curriculum accessible to Spanish speakers. As we're gathering again, I'll ask that our poll answers be displayed. Great, thank you. So the first question, in my organization, I work mostly on programs, finances, both or neither. We've got a good mix, strong showing from the program people, 44%, 35% of people work in both. That's a great combination, especially for grant writing. We've got 5% of the finance people. Glad that you're here today. And then 16% of folks who are not in either area. In our second question, we asked in the series of 5 webinars, I have attended how many? We've got 38% of folks, the largest number, are here for the first time today. So welcome and thank you for joining us. And special shout out to the 5% or the 3% of people who have been here for all 5. We're glad that you've been here the whole time. Thank you everyone for participating in that. So this brings us to our second topic, our panel discussion. It's entitled Working Together, Designing Projects for Partnership and Collaboration. This slide lists our panelists. Lily will be serving as our panel moderator. Lily, I'll turn it over to you to call our panelists forward and to get us started.
Thank you, Sarah. This is Lily again. I hope you all enjoyed your break. I'm very excited to introduce our panel speakers for today. We've got Kirin Kumar, who's the Director for Climate and Disaster Resilience at Northern California Grantmakers. He also served as a former Deputy Director at the Strategic Growth Council as a grant maker. We have with us today Jasneet Sharma, who is the Sustainability Director of the County of Santa Clara, as well as the advisor for Santa Clara County Climate Collaborative. So multiple hats. And then finally, last but not least, we have Dr. Katie Strautman, who serves as principal of Gary Bess Associates. And across these 3 panelists, we have so much expertise in building coalitions, both grant making and grant seeking, and specialization in grant proposal development, as well as the wide spectrum of how to pull these grants together with partnerships in this sector. And so I wonder if we could start with each of our panelists telling us a little bit about yourselves, your organization, and its role in climate and disaster resilience. And so perhaps we can start with Kirin, and then Katie, and then Jasneet.
Thanks so much, Lily, for the introduction and then also for hosting us yet again. It's so wonderful to see folks and that 3% of folks who have been with us from the beginning. Welcome to everybody else who's new. I hope you'll take a look at some of the recordings from past trainings. So just a little bit about myself. I'm Kirin. I use he, him pronouns, and I'm with the Northern California Grantmakers as our Climate and Disaster Resilience Manager. I think I'll jump in, given that we're talking about partnerships and our work at the intersection of climate and disaster and partnerships. I think a value that we hold is that we know that communities that have deep partnerships across the nonprofit sector with local government, tribes, academic institutions, businesses, and other folks are really the most successful in advancing multi-benefit projects, landing public funding, so everything we're talking about today, and then most importantly, are the most resilient to change, including climate disaster. And that's because this work on the ground is so intersectional in nature and really requires those diverse perspectives, and ultimately kind of moves at the speed of trust. And so partnerships in the work, in the climate space, in the disaster space is so central to everything that we're doing. At Northern California Grantmakers, we work to support, guide, and transform the field of philanthropy. And so for us in the climate space, it's really about shifting funding to really focus on partnerships. So that's strengthening existing partnerships, bringing partnerships more squarely into a place of power within climate and climate decision making, and then finally building the capacity to form and sustain partnerships that need to be in place for the long term. And then you had mentioned my previous role. Before joining NCG, I was with the state as a grant maker, where we really focused on really building the muscle of state government to invest in these kinds of partnerships. My belief is that anybody who is funding in the climate and disaster space has to be focused on expanding partnerships and creating those pathways for communities of color and other marginalized groups to really be the decision makers on how investment reaches communities on the ground. I think I'll pause there and then pass it back to you, Lily.
I'll pass it right back to Katie to continue the conversation.
Hi, everyone. This is Katie speaking, and I am a principal at Gary Bess Associates. We are a grant writing and program evaluation firm, and you've seen us throughout the series of webinars with Sarah at the helm, but we are here to provide grant writing best practices and technical assistance to support you all with developing competitive proposals. So delighted to be here and participate in this webinar. I bring experience from having written a lot of grants that require collaboration and partnerships within the proposal development process. And just two initial thoughts on this. So it's really been demonstrated, and you will continue to see this today, that collaboration and partnerships lie at the core of organizational activities. So when deciding on whether to apply for a proposal, early on, we talked about a go, no-go strategy of deciding whether to apply. It's important to consider that partnerships and collaboration expectations within the notice of funding opportunity, it's important to review them to determine if you have the relationship or current partnerships in place to be competitive to apply for the grant, or whether you're the best lead applicant for the proposal, or maybe there's another organization or a group who's eligible to apply and would be a better lead applicant based on their current role and partnerships that they have in the community. From my experience, it's important for a proposal to be competitive. It's important to not approach a grant with, we will develop a relationship or we will partner with an organization to support this work, but rather we are already at the same table working to achieve the same end goal. And through this partnership, which we may strengthen or, have become formal through like a memorandum of understanding, we are able to address the purpose of this notice of funding opportunity. So it's important to be having those conversations, to be developing those partnerships now before a grant opportunity comes, because the grant will come. It's more about, being ready when it becomes available. I'll turn it back to you, Lily.
And then Jasneet, since you've had so much experience bringing people together across different sectors and building collaborative grant proposals, could you tell us a little bit more about how you approach partnership in your community and perhaps elaborate on why you think it's important to think about this early?
Yeah, thanks, Lily. And I think this was like a perfect segue into where Katie closed out, where she said, you already need to be building partnerships well in advance of actually applying or writing a grant proposal. So again, just wanted to say hi to everyone. I'm Jasneet Sharma. I'm the director for the Office of Sustainability and Resilience at the County of Santa Clara. And one initiative that we lead through our office is the Santa Clara County Climate Collaborative. The purpose really of which is it's a multi-sector network that we've pulled together. It's all a community of practice with public agencies, community-based organizations, nonprofit sector, academia, and we're still trying to figure out how best to bring in the business and private sector into this space. I think there's a role they play. We still have to kind of nail that down on how the private sector engages in this kind of regional work for climate change and solutions. So we, based on what we were hearing from our partners in Santa Clara County, both the public agency and our nonprofit partners, was there wasn't really a space where a lot of this foundational bringing people together, forging relationships, building the trust that you often need to be able to work on projects. That space was lacking in Santa Clara County. We do have a lot of movement on climate change, climate solutions, because we have a lot of cities that were leading. We've got Palo Alto in Santa Clara, we've got San Jose, So from a local government perspective, number of cities were leading, but again, those initiatives were very siloed. And oftentimes not well integrated with community-based organizations and nonprofits as well. So that is what we heard and why we launched the collaborative as well. And as a county, we sit in a unique space for those of you that may not be familiar with county government. While we have no direct jurisdiction over any city, every city has their own jurisdiction and their area. We ourselves are responsible for our own operations and then the unincorporated areas of the county. However, we do play a unique role as a county where we are well suited to what I would call playing the role of a convener, a facilitator, sometimes in a more of a leadership role where you're trying to bring everyone together and say, hey, what's the North Star that we're trying to go for here? So depending on what the circumstances is, a county is well positioned to do that. And that was another reason why we stepped into the role. We looked at many models in California of collaboratives, and in many cases, they're led by universities or they're led by other partners. But this is where we felt our strength was as a county government, launching this collaborative as a way to bring not just the community partners, but really bringing the public agencies to the table as well, which often I know can be a little bit challenging also. Lily, if I'm trying to remember, do you want me to speak a little bit more to like how we're building the partnerships in the collaborative? Or I'm happy to pause here as well.
Yeah, I think maybe we will touch on that regardless, since that is such a central focus of this discussion. I would love to guide this conversation towards maybe, particularly for Katie and Jasneet, talking about some specific examples that you have seen where partnerships were built and then negotiated in the grant writing process. Could you share a little bit more about your experience working with people trying to navigate those relationships and how it expresses itself in the actual proposal? Katie, let's start with you.
Sure, happy to speak about this a little bit more. So this is Katie speaking. From a grant writing perspective, there are different types of partnerships, and it really depends on the notice of funding opportunity expectations. I know Angela mentioned this a lot around the budget as well. But it really depends on the grant and how you want to approach collaborations and partnerships, as there's different ways to do it. Some more informal partnerships could even be within the organization, such as different departments are collaborating to improve integration of programs and services. Or there could be partnerships in the community, more of what Jasneet was referring to, where we're coming together with a common goal. You often hear the term collaboration versus coordination, and they're similar and complementary to each other. Collaboration is working together through formal partnerships, such as a collaborative, to achieve a goal together. Sometimes this can be done through like a memorandum of understanding, and depending on the grant application and their requirements, such as the attachments that are required to be submitted with it, sometimes you have to actually already have a formal MOU in place signed by partners, which of course would take some time, and it would need to be built before the opportunity even drops, because sometimes you only have 2 months or less to submit a competitive grant application. There are other types of partnerships, including like coordination of efforts. Again, it could also be part of collaboration, but similar and complementary. Sometimes the work is done through coordination with other groups on a common activity or goal. And this could be even through like local or regional, or even state or national memberships, whereby you might be, participating in various events, kind of networking with others, like-minded organizations who are focusing on similar goals as you. And I think that, again, this isn't like a formal partnership, but it's also something that is really important and should be elaborated on in the grant space to show that, you are already, participating in various activities in order to support, this work that we're doing. I think I'll stop right there and turn it back to you, Lily.
Yeah, and Jasneet, I wonder if you have any quick reactions to that, kind of along the same lines as you were already starting to talk about through your coalition and collaborative?
Thanks, Lillian. Again, this is Jasneet here. I think Katie hit the spot on, the different types of partnerships that you can see. And again, I can't stress enough this importance of this early relationship building, because only then can you go to what we call formal partnerships. So whether it's networking, which is often more based on, the focus is more on information sharing, right? Like who's doing what, better understanding of how do we not duplicate efforts, but start to align efforts. And that's where you move more into the coordination phase, as Katie was saying as well. But really, partnerships is where we all really want to be, whether it's through formalized MOUs that happen between some organizations where we're actually applying for joint, submitting a joint grant application, or even sharing budgets and resources, right? Like that's really when the partnerships start to happen. Our learning has just been that you cannot get to the third stage, which is partnership, without spending a lot of time upfront on that relationship building, the strengthening, the trust building portion, both within community-based organizations themselves, but also between community-based organizations and the government sector, right? So those, I think, are critical aspect. And oftentimes we have noticed that, yes, there is a certain restlessness that sets in if you are building relationships for too long and not pivoting to action, right? Projects, action, delivery. So it's a fine line. I know that we're often walking on, okay, there's only so many meetings I can come to. What is the purpose of this as well? So it really has to follow up with funding, right? Really following up with the money, the funding to actually do some projects. And our goal through the collaborative is to very clearly upfront say, our goal is not to bring in funding for the county to lead on projects. That is not why the collaborative was set up, because there are many times we know that the county is not the right agency to lead on projects as well. So our role there really is getting a lay of the land on, okay, who all is applying for this grant? Because we can actually ask that question when we bring people together, like, hey, are you applying? So raise your hands if you're applying. We actually end up having one-on-one conversations with community partners that we know are applying. And then we'll also hold meetings where we bring all the partners together and say, okay, let's share the concepts that you all are thinking, because we're seeing duplication here. We're seeing overlap in what you all are applying for. And again, the county doesn't need to lead on this. We think you all are best positioned, but just want to elevate the fact that if you're applying for state funding, the state's only going to fund one application in the county. The chances that we'll get multiple grants are very low. So I often like to call this, we will force a marriage to happen sometimes. That's how I like to frame it for people is, we're not happy with the situation, but it ends up being a win-win to a certain extent for everyone. The other aspect I will call out, so sometimes we've done this successfully and sometimes we've completely failed at it. And I have specific grants that I won't mention here where we tried to do that with a number of nonprofit partners that were applying for a state grant, and we still got like 4 different proposals going out from the county. And not much we tried our best, but in one case we know that 3 groups got together and submitted a joint proposal. And I know they came back to us and said, hey, if the collaborative hadn't been there, I would have never met these partners, and this partnership would have never happened as well. I'll make one more point, Lily, is partnering with local governments can be very challenging. We have a lot of competitive procurement requirements that we have to follow. A lot of state grants are now requiring that you've got to have the partnerships baked in. You've got to identify the nonprofit partners that you're working with and write them into the application, which is great, right? Because you do want to say who's doing what percent of the funding is going to the nonprofit sector. But the minute we take that approach, our procurement department is up in arms with us, right? Like, what competitive procurement did you follow? How did you identify these CBO partners? So the sooner these conversations can start, if you have a project idea, I would say start talking with your public agency partners, the sooner the better, because we might have to go through a couple of extra hoops to meet our procurement requirements and then make the justification on why these nonprofit partners are the right partners for this proposal. So I think that's the other aspect I would elevate in this.
Thank you
Lily?
so much. Yes, I was actually just going to turn to you, Kirin. Go ahead.
Yeah, I just, this is Kirin speaking again. I just wanted to jump in from a couple of perspectives as a former state grant reviewer. A couple of like top lines is partnerships within grants are no longer a nice to have, they are a must have. If you take a look at the lion's share of funding that is being made available at the state level and now the federal level, public funders have gotten wise to the fact that it is critical that we are funding projects in communities that are demonstrably community driven. And partnerships are central to that. And so I think just starting there as we talk about partnerships, it's critical that we are leaning into them. I want to re-emphasize all of the points here around early development of partnerships. And the reason for that is both, it just helps things move a little faster as you're writing a grant, but then also there are some very logistical pieces of functionalizing partnerships, including the fact that often for certain organizations, nonprofits and local government and others, you have to take kind of formal resolutions to your board to actually be included in that grant. And so baking that timeline in to take a formal resolution to a tribal council, for example, should be something that you think about at the very beginning of starting to write a grant. A couple of other things I wanted to offer too is because we're putting a lot on you around these partnerships. If you are thinking about where do I get started, I'm not necessarily an organization that does this every single day, but disaster response has become something that we do more and more, and we want to partner with folks. There's some resources out there to help you kind of think about other potential partners in your region. And then also once you're in partnership, how do you make sure that that partnership is successful? And so there's some resources there around how do you structure your collaborative? How do you structure your partnership for both success within that grant and then longevity? And I'll drop those in the chat right now. And then maybe the last two things I'll close on because we're talking about budgets. One is, and I included this in the chat earlier, public funding reviewers are humans too, and they can often kind of interpret what they're reading in an application. And so it's important to recognize that with these applications, with these grants, where there's a lot of talk about a partnership, but that's not reflected in the budget, that raises flags for folks. And so there's some accountability there that needs to be baked into those conversations that you're having as you're starting to enter into these partnerships. And then the last thing I'll offer is a total recognition that all of this work around partnerships is often the least funded activity in our work. And so maybe a plug for any of the philanthropic funders or public funders that are on this call. With so much money on the table right now at the state level and the federal level, it's really important that we lean in to support the early development of these partnerships, the scaling of these partnerships, and then also the sustainability of these partnerships.
Thank you so much for that insight, Kirin. One additional question for you, since we've mostly been talking about public funding, and since now you're situated within philanthropy, are there nuances that grant-seeking organizations should be cognizant of in terms of how partnerships function for putting grant proposals together for public funding opportunities versus typical philanthropic funding opportunities? Or would you say it's pretty much the same sort of advice across the board?
Yeah, I would say it's similar advice. And I think to not overcomplicate it is go back to your values. The values of partnership should be consistent across the board, whether or not you are pursuing that partnership to land a large public funding opportunity or a philanthropic grant. The idea that trust and power is shared across partners in your collaborative. The way that, like I have said before, the budget is shared across partners. And then also that you are communicating to your funder, whether it's a public funder or a private sector funder, the actual operational strategies for making sure that your collaborative is successful will go a long way in helping that funder identify and have an assurance that this partnership is going to be successful. So not just the fact that, hey, we're partnered, but that we actually have structures in place to functionalize that partnership is really important to communicate.
Thanks, Kirin. You touched on something really important, which is, how to think about this from a budget perspective. And Angela, if you are still online, I would love to invite you to turn your camera back on and perhaps rejoin the conversation. And I'd love to put this question to you to connect back to the first half of this webinar, since it's top of mind for all of our participants joining us today. How would you recommend thinking about partnerships from a budget perspective? How does it actually express itself in how you negotiate that budget together? Who gets how much? How do you start that conversation?
Again, it all depends on the project that is being proposed. It's definitely a relationship, and I think Katie was bringing up the different types of partnerships, which a few of them I didn't even think about internally within organizations need to take that in consideration. I'm more used to having to work with like either a subcontractor, a person who is responsible for a part of the grant, but I'm the main person who's responsible for ensuring compliance. And it's a lot of conversations, communication, agreement, understanding, also monitoring as the person who's the lead, making sure you're monitoring that subcontract relationship.
Thank you so much. And maybe Jasneet, do you have anything else that you might add in terms of advice for how to approach the budgeting portion of partnerships? I see you laughing a bit, and I know this can be probably the
It
more
is, because I'm
traumatic parts of the
literally,
process.
yeah, Lily, I'm literally in the middle of one of those budget negotiations where we have three partners, working on a grant, and it's a lot of back and forth, right? But also, I've also noticed like sometimes just how the information is structured and shared. I remember the first time we kind of wrote out the initial concept proposal. It wasn't very clear on, okay, there were a lot of questions on who's doing what and why so-and-so getting so much funding. But I think even how you visually lay out a proposal and how you lay out the budget oftentimes can make it very clear on, okay, so-and-so is doing this much of the heavy lifting, and the funding they're getting is proportional to the tasks they're going to be carried out. So I think it's a very iterative kind of process is what I've learned is you start at one place and then you keep having conversations and you keep adjusting. And I find myself being in that role of a referee over and over again, so I guess that's probably the best I can share there is creating the safe space that people can raise the concerns that they're having with how budget is being allocated is probably one another very important aspect, and how you navigate those conversations, letting those conversations happen within the group, sometimes having one-on-one conversations to listen to people's concerns. So we use a lot of different strategies, which could happen in a meeting, but could happen offline as well to get folks to land at that right kind of budget distribution number.
Thanks, Jasneet. I dropped a note in the chat that if anyone in the audience has questions, I'm happy to turn to you and help facilitate any Q&A you might want to engage in with our panelists. I see a question from Sylvia. For any of our panelists, what publications or outlets do you recommend to stay current about these topics after today? Open question to anyone who might want to answer. Maybe Angela, I might turn to you first since you had a more kind of formalized curriculum about budgeting for the group today, and then anyone else can jump in.
Mostly for federal, we're looking at the I forget the number of it, the OMB uniform guidance to verify what's happening. And that's usually the resource that I use more so is that federal guidance.
I can share personally, like I signed up personally for the, if it's specific to funding and what's funding coming down. I know there are a couple of resources, like if you're in the Bay Area, the BayCAN group, right? The Bay Area Climate Adaptation Network has a resource that they put out regularly for funding out there as well. So that's one that we track. But personally, like I've signed up for the Office of Planning and Research. They send this weekly listing, but it also includes federal opportunities. So you're not tracking multiple places. You can land in one place and then use that to go to all the IRA and the other federal opportunities that are coming out also. And again, I would say if you're, whatever area that you're local to as well, if you have similar hubs or groups that are coming together, staying connected to them also, because there is oftentimes local funding also. Like we know our public health department often gives out funding, our local foundations will give out funding as well.
Thank you, Jasneet. I want you to elaborate a little bit more on that at the end because it gets at my last question for the group, particularly yourself and Kirin. We've talked a lot about the role of the convener. So in Santa Clara, the county has played the role of the convener, and within philanthropy serving organizations tend to play that role as well for funders, as well as for nonprofits and community-based organizations to a degree. How can participants today look for conveners in their areas? What larger category of organizations can they be on the lookout for to plug into networks that can help them bridge these relationships and operate in less siloed ways, way before funding opportunities become available to start having those conversations?
That's a big question. I think Jasneet named a few of them actually. And what I would say is if folks are particularly interested in the topic that Lily is raising in her question, please reach out, because I could sit here for another 45 minutes and just list off a number of those different kinds of bridge building organizations, what we sometimes call network weavers or intermediaries. There's a whole host of folks out there. But what I would say is a place to start would be actually to look at some of the academic institutions in your community. Often everybody from local community colleges and then also other public school system schools have offices and are often place-based in nature and are looking to support partnerships and help track. And so they can often be effective conveners. Philanthropy also, including local community foundations and other place-based funders, often also play the role of a convener and as a network builder. So that's an opportunity as well as a funding relationship to build. And then in the climate space, there's a whole host of different climate collaboratives and coalitions that have stood up in the last couple of years specifically around this, both in the kind of climate resilience space as well as in the disaster space. So I won't bore you with a full list of those, but please do reach out if you're interested in plugging into some of those networks.
And then maybe to just tag on to, I think what Kirin said is, when we were doing the research, I think we found like every region has some of these networks already and these collaboratives. When you look at Southern California, the LA region has it, San Diego has it. We have a very strong network at various scales here. There's kind of a 9 Bay Area County BayCAN, or you have individual counties I know that are doing it as well. And again, when we look towards Northern California, the Sierra Nevada area, so we found something, and the Sacramento area has it as well. So we found something in every region. So I would say start by plugging into some of those, because you really get access to a much bigger group. Locally, I would say, if anyone works in the Santa Clara County area, please reach out to us. I will put in the link for the Climate Collaborative in the chat. And we're happy to have you both participate in the collaborative, but our goal really is to start to provide some of the resources and the tool to build your capacity and help you with that partnership formation. So please don't hesitate to reach out to us. I also know that like the Office of Emergency Management will often hold these access and functional work groups, which is really with community-based organizations. I know that personally because our Office of Emergency Management does that. And then your local kind of disaster relief coordinating organization, it's called a WOAD, but they play that role of they're coordinating all of the nonprofits that participate in disaster relief. I would say that's another place where you should, think about plugging in as well.
Thank you so much. We are at time, so I want to thank our esteemed panelists for sharing your valuable insights today. Your perspectives have really been helpful in helping us understand partnerships and collaboration in the context of grant writing much more. Thank you to our audience for participating, and I would like to pass it back to Sarah to close.
Thank you very much, Lily. I'm sharing our final slide with some information about staying in touch. We've talked about much of this. Start with our website, which is climatecapacity.philanthropyca.org, and look for the recordings that will be posted there. Be sure that you've joined our email list, and you will find information there continuing to come out through the rest of this year. Also information about our in-person events that are happening monthly between now and November. And we're wrapping up now our final webinar for the webinar series in 2024. Thank you so much, everyone, for being part of it. We're going to be placing the survey link in the chat box. Please click it as you're leaving. Give us some feedback to help us evaluate the outcomes of this grant-funded program. And we hope that we see some of you when we're out on the road in the in-person trainings, covering grant writing curriculum, just like what you've seen in these webinars. Thank you so much to our presenters, to our panelists, and particularly to our audience, and those of you who have joined us along the way. Our webinar is concluded for today. You may disconnect now.